So today we have a whole range of panellists to talk to us about state taxes, the path forward, what we can do, and some of the campaigns they've run to change state taxes as well. So first we'll be hearing from Mark Frost, I think, because the presentation is up. Now, Mark is the Chief Economist at the New South Wales Business Chamber. In his current role, Mark represents the needs of small and medium enterprises across a range of policy areas, including tax and regulation. Mark worked at Federal Treasury prior to joining the New South Wales Business Chamber, and we are very excited to be hearing from Mark today. Thanks, Mark.
Thank you. Okay, thank you everybody for the opportunity to be here to talk to you about state-based tax reform. As Scott introduced, I'm from the New South Wales Business Chamber, and we're the peak representative body for business here in New South Wales. We represent businesses in all industries, but also of all sizes, though our membership tends to reflect the general business population, which does tend to have a majority of SMEs among our membership. So that's actually the perspective I'd like to bring today, an SME perspective, and what it's like to be at the coalface of paying tax here in New South Wales. I've got my New South Wales hat on, because that's where my organisation is based, though I think many of the things I'll talk about have a generic or at least a wide applicability to not only other jurisdictions in Australia but also in other parts of the world. So there are three things I'd like to touch on today as specific issues for our members, and that is tax administration, the efficiency of the tax system, and state tax competitiveness. Each of these things, I think, have a particular impact on small business and medium businesses, and isn't necessarily always considered when we look at topics relating to tax reform. We all know that businesses pay tax, but one of their key responsibilities is to collect tax on behalf of the government. And this creates a whole range of additional red tape, administrative burden, which is actually quite complex and costly to those businesses. I guess if we think about state taxes, they're characterised as many small taxes, each collecting a small amount of revenue, but each tax comes with its own learning curves, changes to systems, perhaps a different government agency you've got to deal with. So quite a lot of effort involved to collect lots of bite-sized chunks of revenue. So we'd like a simpler tax system. The second thing I want to touch on today is the efficiency of the tax system. So, look, we all know that if you take a dollar out of the economy, give it to the government, there's a dollar that's not spent elsewhere. But taxes also have an economic cost in that they distort decisions. So if you tax something that's good, we'll find that less of that good thing, whatever it is, occurs in the economy. So each tax comes with an efficiency cost, and that's actually quite important to look at. In New South Wales, we rely on taxes which are estimated in some cases to have 80 cents of economic cost for every dollar collected. So we'd like to look at opportunities to move to taxes which are less costly. The third thing I'd like to talk about is state tax competitiveness. So we operate in a competitive environment. So New South Wales exists, as Scott mentioned in the opening, in a federal landscape, but our businesses also compete with jurisdictions overseas. So we need to make sure that the taxes we're using here don't disadvantage our members, but also other businesses that we don't count as our members. So because we want our economy to continue to be competitive and attract economic activity. So I want to bring this to life with a bit of a case study. So payroll tax, for those who aren't familiar, is a tax paid on wages. So once you reach a certain point, and once as a business you're paying a certain amount of wages, you have to pay tax on those wages. So the payroll tax system is geared in a way where if you're an individual, a sole trader, you don't have to pay payroll tax on the wages you pay yourself. So that's good, because we don't want electricians having to engage in a rather cumbersome tax administration process. There's also flexibility in the payroll tax system such that a business can grow. It can take on more staff, it can employ more people, and it still doesn't get immediately caught up and swept up in the payroll tax system. But eventually, once they grow to reach a certain point, and we're not talking about really large businesses, but in New South Wales, it's currently $850,000 in wages. That's when you start having to pay payroll tax. So to kind of go through some of the issues for our members, one of the biggest things that gets raised with us is the administrative complexity of crossing that threshold and going from suddenly previously not having to worry about it to suddenly have to learn a whole new tax, change your systems, learn what it is to pay payroll tax. So we did some work with our members and worked out that for the typical business, once they cross that payroll tax threshold, they incur around $10,000 a year in annual tax administration costs. Now, that may or may not seem large, but when you think about a business that might only have a payroll tax liability of, even just several $1,000s, yet they've got to start paying $10,000 in tax administration costs, that suddenly changes the game a little bit. To bring some life to that, I want to share with you a quote from one of our members. And now they are a business just over the threshold, so they have a payroll tax liability of a few $1,000s, and they were audited. Now, payroll tax audits aren't an easy thing to go through. You have to provide a lot of information. You've got to keep records up to 5 years, and you've also got to be able to demonstrate the decisions you made, whether you count someone as a liable employee for payroll tax purposes. Now, they were audited, and the costs of it, once they brought the accountant involved and all the rest of it, many more thousands of dollars than even their payroll tax liability itself. So a disproportionate amount of administration associated with dealing with that audit. The outcome of the audit was that the government owed them money. So it wasn't good for anyone involved, even the government itself. So payroll tax in Australia, in recent years we've seen payroll tax cuts elsewhere. So for example in Victoria, South Australia, the ACT, Queensland already has a more competitive payroll tax system than in New South Wales. So a lot of our members were reporting to us saying, well, look, something needs to happen, and we've got one of our members of the team down in Albury that just keeps calling me on a daily basis saying, look, we're getting hammered here. Over the border in Wodonga, they've got just for those who aren't aware of the geography, they're towns on the border, one in Victoria, one in New South Wales. And look, so there really was this sort of cross-border issue, cross-border pressure coming. So we really did need to do something to ensure that New South Wales was competitive compared to other jurisdictions. The final thing I want to touch on is that small and medium businesses in their communities see themselves as the creators of economic opportunity. So to bring a bit of psychology into this, if you're creating jobs, you're trying to increase the wages of your staff, and then the government comes along and says, oh, by the way, you've got to pay us in New South Wales 5.45% for the privilege of doing that, this becomes suddenly a visceral issue for you as a business. So that's something that I think accounts for why payroll tax among our membership is such a huge issue. Now, all of this sounds pretty bad, and we go and we've been for some time talking to the government about this and over many years, and we were really happy when last year Scott's team actually announced a range of cuts to payroll tax, and they delivered a tax cut for every business in New South Wales that pays payroll tax. But they also did so in a way that enabled 5,000 businesses to get out of the payroll tax system altogether. And that's a really important point when you think about that tax administration piece. So 5,000 businesses no longer incurring those costs. The other thing they did was announce a review of payroll tax administration to work out where some of the pinch points were. So all of this is good. We were really happy with that outcome. Then Christmas Eve last year, the state opposition here in New South Wales announced very quietly at the end of a media release that they wouldn't be doing what the government had committed to do, and that they would keep the revenue. As a business chamber, this obviously was a very disappointing announcement, and we didn't want to be a business group that tells the government what to do, but doesn't get its hands dirty and make the case for the change. So one of the first things we did was set up a payroll tax petition to try and change the opposition's mind. This might seem like a little bit of an antiquated thing to go out there and do, but it's actually really important in drawing out the case studies and the examples of how payroll tax affects people in the community. We have regional members and really good regional networks, and we're able to pull out those stories, put our guys out on the camera in the local TV news stations and papers and the like, and really make the case for why this is really important. The other thing we did was set up a social media campaign targeting marginal seats, and we, I'm told, had 32 million impressions to our campaign and a further 3 million views of a payroll tax ad, which I'd like to show now.
If the technology works.
Let me get this right. We tax smoking more so people smoke less. We tax gambling more so people gamble less. We tax alcohol more so people drink less. So when New South Wales Labor says they'll tax small and family businesses more for hiring extra staff, what do they think will happen next? Let's change Labor's mind and keep New South Wales #1. Sign the petition at jobstax.com.au. Authorised by Silvermont, New South Wales Business Chamber, Sydney.
Now, this ad went out, and our campaign went out to mostly regional parts of the state. So if you're based in Sydney, or certainly if you're based interstate, you wouldn't have...
All it takes is one idea on how to change the way you see the world.
I thought I had some competition on the panel here. So look, you may not have seen it if you were based in Sydney, though. As I said, 32 million impressions and 3 million views. I think it was quite successful in the end, at least making the case for why payroll tax is important. Now, I've just gone through payroll tax as one example, and I think I'd probably classify the changes as more housekeeping when it comes to managing the tax system. It isn't probably a big boulder reform or change that I think potentially many people would like to see by way of ambition. But I think nonetheless a lot of the principles I've talked about are very relevant when it comes to looking at a tax reform package and coming up with a model that is capable of being supported by the broader community. But if we are looking forward to the topic of further reform and bolder reform, I'd like to actually bring up a slide here about the New South Wales tax mix, because I think going back to that point on one of my first slides around the efficiency of the tax system, there are some really good opportunities to improve outcomes for the community. I want to draw your attention to box 5.1 from the 2016 New South Wales Intergenerational Report. And one of the things that noted is that over and above the revenue generated, the statewide economic cost for every $1 million of transfer duty, which is stamp duty, is estimated to be around $800,000. So just think about that for a minute. So you're buying a home, and well, you're probably not paying $1 million in stamp duty, but let's just say for argument's sake you are. There's $1 million coming out of the economy, given to the government to spend on what it needs to do. But then over and above that, there's a further $800,000 in economic costs. Now, this is real estate agents not getting business, retail outlets not getting business once homeowners move into their home and need to furnish it, construction businesses. All of these parts of the economy lose out because of that tax. Now, the last thing I'd like to bring up also in box 5.1 is a further point to be made about land tax. So land tax, the equivalent metric is only $90,000. So almost 10 times in order of magnitude and looking at the efficiency cost of these taxes. So I guess it follows that if you are going to look at the costs and the economic costs of taxes, you've got to look at which ones you're relying on. This is, I guess, further consolidated by the fact that if you look at New South Wales' own source revenue, about 1 in every $3 comes from stamp duty, yet only 9% comes from land tax. So I won't necessarily prescribe what I think the reform should be, though I think it's relatively apparent where there is an opportunity. I think the critical thing when we talk about, there's no shortage of groups coming out saying replace stamp duty with land tax. But I think the critical thing is to think about how you can manage a transition, whether it's to land tax or another tax, because you can't put things to government and say, "I'll just get rid of this tax altogether," and then suddenly it has a big hole of 33% of its own source taxes to fill. So you've got to come up with alternative solutions, whatever that might be, to try and work out the gains. And we did some modelling on this back in 2016, and we commissioned some modelling from KPMG, and they basically, the results of that modelling, that it would boost the economy by 1%, increase after-tax wages by 2%, and so quite a significant, quite significant gains on the table here. So hopefully we can get into a bit of a discussion about that and other reform opportunities, but those are sort of some of the key issues we see going forward. Thank you very much.
Thanks for that introduction, Scott. I'm going to commit the ultimate heresy in this gathering and say that taxation should be higher. What taxation am I talking about? State taxation. Why? Because of what Scott was talking about in his introduction, that we have a federation, but one of the most fiscally unbalanced federations in the world, because the states are collectively are responsible for about just a little under half of the total public sector expenditure, at about 16% of GDP, but their taxation is about 5% of GDP. The central government is responsible for just over 80% of total taxation in Australia, and the states for about 16%. So the states do not raise, through their own actions, anything like the amount that they spend, and the balancing item is this large transfers from the central government, which raises, as I say, just over 80% of total taxation. So when I say taxation needs to be higher, I'm saying state taxation, and not the whole burden of taxation being higher, but the mix of it needs to change in the direction of states and away from the central government, because the imbalance that we have now is very bad for the functioning of our federation. We're not getting the best out of the federal system. In federations, interstate competition among the subnational jurisdictions helps to keep the overall tax burden down, and there is some of that at work in Australia. We do see some competition with payroll tax, and historically, interstate tax competition led to the complete abolition of estate and inheritance taxes in Australia. We have none of that, and that was partly because of interstate competition. But we're still missing out on the best of interstate tax competition because of this big imbalance, which has led to, because the federal government collects so much of the revenue, naturally, over time, its influence over public expenditure has increased. And you've seen this has been going on for decades, but it's a gradual, incremental process. And this has been in defiance of the principles underlying federalism, the principle of subsidiarity, the principle of having clean lines of responsibility between what the different levels of government do, so minimising overlap, and the principle that the level of government responsible for the expenditure should also be responsible for raising the revenue to finance that expenditure. So they should have to go to the electorate to be accountable for both the expenditure and raising the revenue. We've just, as you may have noticed, we've just been through a federal election in Australia, but at times I felt it was another state election or even a local government election, because you had parties, including the Conservative parties, or maybe even especially the Conservative parties, making promises to spend federal money on things which are really nothing to do with the federal government's constitutional responsibilities. Everything from local swimming pools to sports ovals, to life-saving clubs, to scout halls, to security cameras in the streets, and all of this kind of thing. And also on local urban roads and urban public transport. In my own electorate of Warringah, which is the highly celebrated contest between Tony Abbott and Zali Steggall, a big issue was a road tunnel from the northern beaches towards central Sydney. And this tunnel cannot happen unless the state government says so. The federal government is not going to make it possible. The same thing happened in Victoria, where the coalition promised to build a controversial road tunnel in Melbourne, which the state government has said it does not want to do. Now, you can argue that the state government is wrong, but in my books, it's their call. They are the ones to determine the priorities, and this tunnel cannot be built without the cooperation of the state government in Victoria. So you had all this nonsense going on in the federal election. It's not new in Australia, but I think it represents a further move of the borderline between the central government and the state governments, the movement that we've seen over many decades, ever since one of our very early Prime Ministers, Alfred Deakin, said that there were certain provisions in our constitution which meant that the states would always be tied to the chariot wheels of the Commonwealth government. And that is the way it has turned out. The level of government that has the revenue power is the one that has called the shots, and its control over the expenditure side of the public sector has gradually increased. And I think that a redress of this imbalance would be good for democratic accountability, it would be good for keeping the overall tax burden down, and it would be good for more efficient resource allocation. It can be, the redress could come about either through making public spending even more centralised than it already is, or through decentralising taxation power. And to my way of thinking, it's the latter that is the way to go, even though historically it has been the former. And I think that realistically, the only way to bring it about is to bring the states into the field of personal income taxation, not to increase the total personal income tax burden, but to share the power with the federal government. That's a radical thought in Australia, but it already happens in other federations such as the United States, Canada and Switzerland. But it would need to be very carefully designed to avoid inefficiencies and avoid an increase in the overall personal income tax burden, at least at the beginning. Now, as far as current state taxes are concerned, yes, certain things could be done we're really talking about the dregs of the tax system, because that's what the states have been left with. But certain things could be done to improve the efficiency of the state taxes that we have, as Mark was talking about. And everybody's favourite, it seems, is replacing this stamp duty on real estate transfers with a land value tax. I think that's very elegant theoretically, but implementing it in practice would be a nightmare, and a political nightmare certainly, and I don't see it happening, frankly. I've advocated it myself in the past. I will admit, confess. But I think it has so many snags to it, and the imposition, the burden that would have to be placed on the household sector to pay this land value tax would be enormous, because the stamp duty revenue itself has become enormous with its growth over time. So for that reason, I think it would be politically very difficult. And I think that in practice, if it ever happened, what you would end up with eventually would be both. You would have both a smaller stamp duty and a land tax on everything. And that's basically what you have in most countries in the world. Most countries have some kind of property transfer tax. They don't call it what we call it, stamp duty necessarily, but they have it. And they also have a property tax on values. And I predict that if we made the switch in Australia, we would actually end up with both and a bigger overall tax burden. So I think that although it's very elegant from an economic efficiency point of view, from a political economy point of view, we have to be very careful about it. So I'll leave it at that.
Thanks, everyone. We have a random order here today, but I think it's sort of worked out okay, because I'm going to disagree with some things that Mark said, but I'm also going to continue the heresy of Robert and double down on some of the heresy and disagree with some of his points as well. I think we need to increase taxation, specifically state taxation. It's the week after an election, so I don't need to continue the Liberal Democrats' mantra, and I can actually deal with the reality that government is growing in Australia despite our best efforts, and irrespective of whether or not a Liberal government is in power. So I'll get into some details. I want to propose 3 specific state tax increases for 3 reasons, some touched on. Firstly, I believe the government spending is growing at every level of government and regardless of which party is in power, and I think the stats demonstrate that. And given that, despite our best efforts, we should make sure that we don't pass on to the next generation debt from spending this generation, so we should be increasing taxation in this generation. I agree with the points about federation made by Robert, and I think that's part of the reason why we should be increasing some taxes to try to generate some degree of reduction in the vertical fiscal imbalance in our federation. And I'd also note that an advantage in reducing this vertical fiscal imbalance would be we would also be reducing the horizontal fiscal equalisation that occurs in our federation, or at least the scope for that equalisation, which is essentially a welfare system between the states. It's a terrible idea. And I also agree with some of the points made about different taxes having different damage caused. So there is some advantage in shifting from one tax to the other. But essentially my overall argument is not one of tax switching, which quite rightly there are some issues with transitions, and in realities we'll probably end up with both taxes. My argument is that we actually need to increase taxes if we're going to be responsible for our own spending. Just touching on the issue of the damage, the different sorts of damage done by different taxes. As touched on before, the main reason why different taxes do different damage is because they change our behaviours in different ways. So in the 3 taxes I'll talk about, the reason why I'll be advocating them is because they change our behaviour less. So if there's a tax-induced change in our behaviour, that's generally a bad thing, because how we would behave in the absence of tax, more often than not, is what's best for us. So any alternative set of behaviours is essentially second best. Now, the three taxes at the state level that I think we should be either increasing or introducing are a state-based resource super profits tax, a state-based exemption-free land tax, even though we will also be keeping stamp duties because we have to keep on raising revenues in this country because we're becoming a socialist state. And thirdly, I will be going against what Mark said and thinking that we need to ramp up our payroll taxes. First things first, resource taxation. Now, the states currently have royalties, which are some of the worst, most damaging taxes on the books. Now, these taxes are damaging because they massively change behaviour. Consider two mines, both that promise the same rate of return. But one mine is a low-cost mine that will generate low-value output, and one is a high-cost mine that would generate high-value output. Now, the way we structure royalties at the state level in this country means that we basically tax the value of production with very little consideration of the profits, very little consideration of the costs involved of the production. So because of royalties, these two different mines, one might go ahead and one might not. The high cost but high value mine might not go ahead because of tax. And a tax-induced situation where one mine might not go ahead and another mine goes ahead is a terrible change of behaviour, extremely damaging. But that's not the only way we can do resource taxation. Now, the Henry Tax Review proposed a super profits tax on resources. Now, the basic idea there is that you pay money to government if your project generates above normal returns. And you generate a tax loss if your project does not achieve normal rate of return. So that method is a way that should not particularly influence decisions about whether or not a mine should go ahead. Problem with the Henry tax proposal were two main big flaws, and they made sure, particularly when the government got in control and made it even worse, that the tax was not a success. The first problem was that the government was penny pinching and pretty dastardly, really. They did not make the tax losses immediately refundable. So the government merely promised potential mining investors that, yes, there will be this nice, generous tax loss that we'll provide for you in years where you don't make a return, particularly in the early years. And over time, we'll apply generous interest to this tax loss, but we're not going to immediately pay it out. That inherently made would-be investors concerned. It created massive sovereign risk that you could never avoid, that a future government would say, oh, actually, now that your project has turned to be profitable, we're not going to give you the full tax loss, or maybe we're not going to give you the generous interest that we originally designed. But it's perfectly possible for a state government to introduce a super profits tax of its own that does provide immediate refunding of tax losses under the system. So that could be resolved. The second problem with the Henry tax proposal was that he was proposing a Commonwealth tax. But the minerals are owned by citizens and they are held by the Crown in right of the state. Essentially, the state government's minerals, not the Commonwealth's. And there is no constitutional bar on state governments having their own super profits taxes or really any income-based taxes, despite what happened in the middle of last century. If a state introduced its own super profits tax on resources, it would avoid a lot of the problems that the Henry Tax Review came across. For instance, the proposal of a Commonwealth minerals tax at the same time that the state had a bunch of royalties created massive problems. But if a state proposes its own resource super profits tax, then those problems die away and the states have an incentive themselves to trim back its own royalty regime. It's a perfectly doable tax. It's a natural tax for a state government to have, particularly given the immobile nature of the assets in the ground. So I think that is something that even as libertarians we should be proposing to do, at least until we actually take over the world and start reducing government spending. Now, the third tax I want to touch on, I won't spend too much time talking about, is land tax, because we've had a bit of a discussion so far about land tax. But I'll just touch on some of the main problems with our current land tax, which are quite readily fixable at the state level. It's important we deal with the nitty-gritty of real life and administration, and so existing state taxes that can be tweaked to be better is something we should look at. Now, the problem with land taxes in this country, well, firstly, they're reasonable in the fact that they are based on the unimproved value of land, which is a good idea of basing it on unimproved value. But the terrible thing is there are massive exemptions. And because of those exemptions, it changes people's behaviour about how to use land. And as soon as you start changing people's behaviour because of a tax, you're creating massive costs. People are choosing second best options. So what are the exemptions? Firstly, in every state, there's a massive tax-free threshold for land tax. And then, I believe in all states, there's a progressive scale for land tax. So that is essentially a massive discouragement for large land holdings. So it's a massive discouragement for institutional investment in land, particularly for rental housing. If we're going to have a system that discourages anyone being a successful business that develops land and instead says, no, we just want a whole bunch of small individuals or small businesses doing that job, then that tax is going to create a lot of damage. We should get rid of the tax-free threshold in land tax, and we should get rid of the progressive scale. Another problem with land tax is that I think in most states, but definitely in New South Wales, land that is used for agriculture or zoned for agriculture is exempt. This is a massive discouragement of use for non-agricultural uses. And we don't want government telling people what's the best way to use land. That is inherently going to create massive costs. Thirdly, the exemptions in land tax to look out for are all the feel-good exemptions. For instance, aged care centres don't pay land tax. Childcare centres don't pay land tax in at least some states. Healthcare centres, not-for-profit organisations don't pay land tax. This is just, again, the government distorting and discouraging people using land in certain ways and encouraging them in other, probably less productive ways. But get rid of all those exemptions, which is all doable at the state level, unilaterally, without negotiations with the Commonwealth, and you convert a not particularly good tax into one of the less damaging taxes that we have available. So that's a second tax that I propose that we should, even as libertarians, consider ramping up. Thirdly, I propose that we should be increasing payroll taxes, again, contrary to the views particularly of Mark at the outset. Payroll taxes have a bad reputation, and yes, they are by definition a tax on jobs. However, we have to recognise that when we earn a wage, all of that money is eventually consumed. And we generally have a view that an exemption-free consumption tax doesn't change too much behaviour as long as it's flat, and therefore it's one of the less damaging taxes. Well, an exemption-free flat payroll tax would essentially be equivalent over time to an exemption-free flat consumption tax. It is not inherently a damaging tax. What makes it damaging are all the exemptions. Now, unfortunately, in every state there are a massive number of exemptions for payroll tax. The main one being, again, the tax-free threshold. The tax-free threshold means that the majority of revenue that could be collected out of a payroll tax isn't collected. Now, it generates the feel-good idea that was raised by Mark at the start, that we're saving small businesses, but what we're actually doing is discouraging businesses to be big and to grow. It's a terrible situation where businesses that are small, don't employ many people, don't pay tax. Businesses that are big, employ lots of people, do pay tax. That distortion should be removed immediately. But that's not the only, even though it's the main exemption in payroll tax which does the most damage, it's not the only one. We also have certain types of labour income not being subject to payroll tax. So again, if you employ someone and you're a not-for-profit organisation, that person doesn't pay payroll. You don't pay payroll tax for that person's wage. And similarly, in some states, I think including in New South Wales, if you're a regional business, you get an exemption. That's, again, mucking up people's decisions about where to work. There's also massive interference with how remuneration occurs under payroll taxes, because we provide exemptions for certain termination payments or certain fringe benefits. So that, again, creates the red tape that Mark was talking at the start. By actually having a exemption-free payroll tax, you get rid of a lot of the red tape that Mark was concerned about. At the same time, you raise revenue because everyone pays the tax, basically. You cannot avoid it. And taxes that you cannot avoid, unfortunately, are the best taxes, because people don't spend effort trying to avoid what they would otherwise do. So, I personally, and particularly as a Liberal Democrat, would love to reduce government spending. And we've got detailed plans to do that. However, we're not currently in power. And I think it is unrealistic to think that even under a Liberal government, that government spending will reduce. Any cursory look at any documentation will see that under any way that you measure it, government spending is ramping up. In fact, it has ramped up so much over the past 5 years that it's really hard to think that this current government isn't essentially just another Labor-light government. And all the projections and all the promises in the election were for more of the same. So we have to admit that we're losing the battle, government spending is rising, the responsible thing to do is to increase tax. And so I think we should be increasing taxes at the state level to deal with some of the concerns that Robert raised about our federation and how sick it is. We can do this unilaterally. You don't have to have negotiations with the Commonwealth. And we should do it in the form of a super profits tax on resources, payroll tax without exemptions, and land tax without exemptions. Anyway, that's my argument.